Back with yet another video covering the Chapter 5 PowerPoint. I hope this PowerPoint video helps with the quiz due this week on Chapter 5. Okay, so Chapter 5, as you already know, covers federal and state unemployment taxes. The learning objectives for this chapter include calculating the federal unemployment and state unemployment tax, determining matching employer taxes, recording an employer tax journal entry, accounting for non-employee compensation, and calculating the self-employment tax. The federal unemployment tax, FUTA, is levied on the employer. It is based on the taxable earnings of employees, and the government uses these taxes for unemployment compensation provided to out-of-work individuals. 6% is levied on the first $7,000 of taxable wages. In terms of credit reduction states, certain states and territories may be subject to a credit reduction. In the U.S. Virgin Islands, for example, there is a credit reduction FUTA rate of 2.4%, 3%, respectively. If a state receives a credit reduction, employers must pay a higher federal unemployment tax. To make federal unemployment tax payments, these payments are usually remitted on a quarterly basis, and they are paid on the final day of the first month at the end of the quarter. So if you look here, in the first quarter, the federal unemployment tax is due April 30th. The second quarter, the FUTA tax is due on July 31st. The third quarter, October 31st. And the fourth quarter, January 31st. As for the state unemployment tax, it is based on the employee's taxable earnings and is levied on the employer. 3 states, Alaska, New Jersey, and Pennsylvania, also levy the state unemployment tax on employees. The number of laid-off employees affects the state unemployment taxes. Keep in mind that employers are assigned a SUTA tax rate based on employee turnover. If no track record exists, the employer is assigned a new employer state unemployment tax rate. Okay, so the SUTA tax rates and the associated wage thresholds differ from state to state. The State Unemployment Tax Dumping Prevention Act of 2004, this requires a state to ensure prior employee turnover impacts the SUTA tax rate. A credit may be claimed for the SUTA tax paid if an employee has worked in multiple states. Matching Social Security and Medicare tax. So employer must withhold and pay an equal amount of Social Security and Medicare tax from employees. Taxes are expenses to employers. Taxes are based on the level of employee earnings. Accounting for payroll in terms of the employer portion. Journal entries, the first entry records salaries, expenses, and wages expense. The second entry records payroll tax expenses paid by the employer. Credits to the Social Security tax payable and the Medicare tax payable are identical to those in the prior entry. So as you may already know and have already done in the practice set, you have done journal entries for accounting for payroll for the unemployment taxes. Non-employee compensation. So independent contractors are workers who determine how the employer's work is to be completed. When an employer hires an independent contractor, it must complete the following forms: Form W-9, 1099 miscellaneous, and 1096. As you already know, you have filled out examples of these forms in the previous practice set as well for Chapter 5. Independent contractors. The following professionals frequently work as independent contractors, as I already mentioned: accountants, lawyers, doctors, subcontractors. If the employer cannot determine if the individual is an employee or an independent contractor, the IRS can decide. So in terms of accountants, you could think of auditors, third-party auditors that may be auditing a company. That is a requirement from many large publicly traded corporations with investors. You have people hiring lawyers for various civil and criminal suits. Doctors as well, who might have a private practice. And other subcontractors, an example could be a marketing staff or contractors that may. Yes, as I mentioned, subcontractors, electricians, or other type of construction related services that may company may need is an example as well. So the Form W-9, as you may remember when you filled out for Chapter 5 practice set, the employer must report withholding taxes but does not withhold the compensation from the contractor. The employer must also obtain either a contractor's social security number or the employer identification number. The employer retains the completed Form W-9. Also have the Form 1099 miscellaneous. Employer must report gross earnings but does not withhold any compensation from the contractor. The employer furnishes Form 1099 miscellaneous to the independent contractor. So this is a view of the 1099 miscellaneous form. I'm not sure why it zoomed out so much. So here's a view. 1099 miscellaneous. So for contractors, as you remember from the practice set, chapter 5, you filled out the non-employee compensation, the amount that was provided in the practice set. And you also have the Form 1096. This form summarizes all compensation paid to every independent contractor. So this was a form that you have also looked over in the previous chapter set. Okay. So the Self-Employment Contributions Act, SECA, this was established for self-employed individuals. The net self-employment income equals the income after subtracting the business expenses. The taxable earning threshold also applies. So this was also something that was applied during the practice set. If you have any questions related to any of these topics, if you still need to complete the practice set, always feel free to ask. Also, I hope this video helps with studying for the quiz. I highly suggest taking notes, taking quiz, looking over the textbook for the quiz itself. You can always have that open here as you take the quiz as well. Also, thank you for watching, and also remember that I am always available during office hours and for Zoom appointments. And thank you for watching.